Hey everybody, welcome to Money's No Object. I am your host, Dylan Howell. This is episode number 108 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think can be particularly useful to you in your long-term financial journey. Today, what we are going to talk about as we are coming towards the end of the year, it is important to know where you stand financially. It is important to understand what is going on in your financial life, and in order to do so, you need to write it down. You need to put it down somewhere. You need to be able to see where you are financially. And so today what we're going to talk about is your net worth and your net worth statement. And if you've never created one or you don't know what one is, no worries at all. We are going to walk through everything in today's episode. So stay tuned and get this little piece of financial knowledge that may actually help you keep track of your financial life moving forward. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave any feedback in the comments down below as we go through this episode, and I would be more than happy to get back with each and every one of you. If you're listening on Apple or Spotify podcast, then make sure that you subscribe there and leave me a review. If you like these long form episodes that I'm putting out daily, then you may also like my social media accounts. Just go follow me at MNO with Dylan on all the major social media accounts. And I think that'd be a really useful follow for you to help you get all the supplementary information that I put out there that goes along with these videos, and then some just random things that I put out day to day. And then if you need somebody to help you walk through your financial life, you need somebody to help you create a plan that will work for you, something that you can go step by step and something that will help you and your family over the long term, then I can help you do that. Just go to my website, www.mnowithdylan.com, click on the Work with Dylan tab, and we can begin pushing towards your long-term financial goals together. So your net worth. What is your net worth? And this is a very, very good question, and many of you may not see a reason to answer this question if you're at a certain position financially, but you should know. You should know at the end of every year at least what your net worth is standing at. And the reason that you should know this is because this gives you a picture of what your financial position is, where you are financially moving into the new year. And whether it's a good place or a bad place, it's still important to note. It's still important to understand where you are. So, what is your net worth? Well, your net worth is nothing more than what you own minus what you owe. And that is a very, very simple calculation. It's a very, very simple thing to understand, but then you go, okay, well, what do you mean what I own minus what I owe? What does that actually look like? Well, what you own is exactly that. Every single thing that you own, everything that you own, whether it be your car, your house, whether it be investments that you have, the money in your bank account, all of those types of things are things that you own. And so that needs to be part of your net worth, obviously, because your net worth is doing nothing more than tracking how much you are worth. And that word net means that it is net of what you owe, right? And so it is what you are worth, meaning what you have, minus what you owe, right? So we're saying net worth, right? Net of what you owe, how much are you worth? And so if we know that those things are the things that you own, then the things that you owe are pretty obvious as well, right? If you make a house payment, right, then the amount of money that you still owe on your house is how much you owe. If you make a car payment, then the amount of money that you still owe on your car is how much you owe. If you owe student loans, then the amount you owe on your student loans is how much you owe. If you owe credit card bills, then the amount that you owe on that credit card is how much you owe. And so you see, you end up with exactly what you would be worth if you took all of the things in the what you own column and you were to liquidate them, create cash, and pay off all the things you owe, and then you see what is left. Now, obviously, this is not a difficult calculation. Then you may say, well, Dylan, why do you spend this whole episode on this idea that is not too complicated, that is not too difficult? Well, because the net worth is what matters. And what do I mean? The net worth is what makes you a quote unquote millionaire, right? When people say that they are millionaires, that does not mean, and this is a very, very common misconception, being a millionaire does not mean that you make $1 million in income or in salary or $1 million a year. That's not what that means. Being a millionaire means that you have a $1 million net worth. That means that if you take what you own and you subtract what you owe, then you will have $1 million left. Okay. And so that's what a millionaire is. And if our goal in building wealth is to get to that millionaire status, is to get to that point where we are financially free and we have a large amount of money saved up for ourselves, for retirement, for the future, things like that, then what we are shooting for is to have a high net worth. Because owning a lot of things is really, really useless if you own them and you owe a lot of money on them. So for instance, you can own your house, but the entire value of your house does not count towards your net worth. What counts towards your net worth is the amount of equity you have in your house. Because you got to think about it. What you own, yes, you own the house. So let's say it's a $250,000 house. Then you would put $250,000 on the own side. But if you owe $230,000 on that $250,000 house, then you would put that on the owe side. And so when you subtract that out, that is the equity in your home. So that $20,000 would actually go towards your net worth. And so you see that this is a very distinct calculation. And the same thing goes for something like your car. Let's say you're driving a car and the car's worth $14,000. And let's say you still owe $7,000 on that $14,000 car. Well, if that means you could sell it today for $14,000 and pay off the $7,000. So how much equity do you have in the car? You have $7,000. So that would go toward your net worth. And so you see where I'm going here. On all of these different things, that is what you would do. And for any of you out there that actually know accounting, then this is nothing different than the accounting equation. The basic accounting equation is assets equals liabilities plus equity. And so if you have assets, right, assets are what you own and liabilities are what you owe. And so if you just do a little quick algebra there, then assets minus liabilities equals equity. Or in other words, what you own minus what you owe equals what you are worth. And so in the personal finance sense, what you own minus what you owe is equal to your net worth. And so this is no different than a basic accounting equation. But what we want to do with this basic accounting equation is take it and turn it into a net worth statement for ourselves. We want to create a net worth statement so that we can keep up with our net worth over time. And now, why is this so important? Well, we talk all the time about wanting to make progress, wanting to progress, whether it be in paying off debt or saving money or investing for the future. You want to see incremental progress. Well, if you can make a net worth statement at the end of every year and then the next year go and look at that net worth statement or the previous net worth statement and go, oh, wow, look how much progress we've made. Or maybe you had a bad year. Maybe your net worth declined, and understanding why your net worth declined and knowing how to get back on track and knowing how to do the right things moving forward, then that is so important. It's a good benchmark. It's a good place that you can look and go, okay, I know where I was and I know I want to progress from that place to a higher net worth as the years progress. So that should be your goal as far as your financial position, is to increase your net worth year over year. And will that always be the case? Maybe not. Especially early on, that may not be the case. But if you are constantly shooting for that, then having that net worth statement there will help you to know where you were and know where you're going. Because without knowing where we have been and without knowing where we're going, then we're kind of wandering around aimlessly. And what do they say? They say if you aim at nothing, you'll hit it every time. And so we need to know where we're aiming and how we're going to get there and whether or not we are taking the correct steps to get to that place. And the correct steps to becoming a millionaire are increasing your net worth year over year, pushing towards that goal. So how would I set up a net worth statement? Well, what I would do is I would go onto something like Excel, right? Microsoft Excel. And most of us have access to Microsoft Excel. And if you don't, then just take out a sheet of paper and do the following. On one side of the paper, just write assets. The other side, write liabilities. Or you can say on one side, write what I own. and the other side, what I owe. And you need to go write down the list. And so, like I said earlier, you would begin with your home. And if you don't know exactly what your home is worth today, then go online, look at a couple of comparable homes in your area and see what they're selling for, and then just kind of give it a guesstimate as to how much your home would be worth today. Because we want the market value of things. We want to know what things are worth today. And so I would take the market value of my home approximately, and then you should know exactly what you owe on your home. You should be able to find that. That should be on the most recent statement sent to you by your lender or by the bank that holds your mortgage at this time. And so you should know exactly how much you owe, and you would put that in the what I owe column. And so I would just call it house, and then you would say the market value and the what I own, and the what I owe column would be the amount that you owe on your home. And then I would go, okay, well, what about my vehicles? Well, then with vehicles, obviously I don't like for you to have a car payment. I don't want you to have a car payment. I think those hold you back, but some people do. And if you have a car payment, then what you owe will be greater than zero. And so what you would do is I go to Kelley Blue Book, and I look up the private sale value, meaning the amount that you should be able to sell it to someone in a private sale situation, not a trade-in, the private sale value. So I find that median amount for how much my car would be worth, and I put that in the what I own column, and then the what I owe is obviously in the same way that you did with your home. You can find how much you owe on your car. And you can do that same thing for any other asset that you own that you have financed. Obviously, we don't want you to have any of these other assets financed because most of them are depreciating, just like cars are. Cars are going down in value over time because next year when you sit down and do your net worth statement, then the value of that car, if you still have that car, will be less than the value of that car today. And so that is why we don't want to have car payments. But I digress from that, and I move to the next set of items that we would look at on the net worth statement. We would then put our investment accounts, and I would put down every individual investment account that you have. And I would just go onto those sites, go online or go to your most recent statement, whatever you have access to, and just put in the current market value of your investments. And I know these fluctuate day to day, but they shouldn't fluctuate so much, especially here at the very, very end of the year, that you're going to get in trouble with putting that value in today. So I would just go and put those market values of your investments in today and have them listed by the specific account that they are. And so you have all of that there. And that's a good way that you're able to look year to year how your investing changes and how your investments grow and how you adding money to your investments changes things over time. And it's just one place that you can go and look at all of these different accounts and you can see everything that's there. And then along with your investments, obviously go to your bank account. Any checking account, savings account, money market accounts, anything like that. Those are things that you own, right? And so you would also put those under your investment accounts in the what I own column. And then from there, things get a little tricky. So if you have anything else of really good value, so if you have any types of collectibles, if you have some type of business that you own, a business interest that you might owe something on that business as well, but if it runs through you and your tax returns, then make sure that you put it all there as well on what you own and what you owe. And then there are some other things that are specifically what you owe. And obviously those things would be things like student loans. You would go to your student loan provider's website if you have student loans, and you can see exactly the amount that you owe, and you would go and put that down in the what I owe column. And so that would be part of that particular column with nothing going in the what I own column because you own that degree. That's what you own. And so that's helping to create your income, hopefully. And so student loans would be there. Obviously, credit cards. If you are holding a credit card balance, that should be in the what I owe column as well. And of course, I don't like you to have credit card debt. You should never have credit card debt. You should never be holding a balance on a credit card. But if you do, that will go on this side of your net worth statement on the what I owe. And so then you would also take any other thing that you have financed, any other thing that you owe money on, whether you have a HELOC, meaning a home equity line of credit, whether you have any other outstanding personal loans, anything like that, right? Anything that you owe money on or making a payment on systematically, maybe a 401k loan, anything like that goes on the what I owe side. And then what you should do is you should take the sum of everything in the what I own column and the sum of everything in the what I owe column. And at the bottom of each of those columns, you should have that total. That sum should be at the bottom of each. And then in order to determine what your net worth is, just take the sum of the what I own and subtract the sum of what I owe into a cell by itself, and it should be your net worth. That should be what your net worth is approximately right now. And that is how much you are currently worth. And that's the number we want to consistently look at, because that number tells us, are we making progress? Are we getting a better financial position? And as I talked about earlier, this net worth calculation is very, very similar to the accounting equation. And so in the same way, your net worth statement should look a lot like a personal balance sheet, because the balance sheet for a company is nothing more than their assets, liabilities, and equity. And so it's what they own, what they owe, and what they're worth. So it's nothing more than that. And so if you have any idea about accounting, this is no different. It's just personally, what do you own, what do you owe, what are you worth? And something else that we use these net worth statements for is following and tracking our progress of paying off debt. And so right now you may owe a lot of things. You may have a long list of the what I owe. Hopefully over time that list gets shorter and shorter and shorter. Hopefully you owe almost nothing or nothing eventually once you pay off that home down the road. Or if you've already paid it all off, bravo, I could not be more excited for you. That is where you want to be. You want to be at the place where your net worth is 100% your what I own column, because you should own everything and owe nothing. And that is where you want to be. You want to be an owner, not a borrower. And so that's something we want to use this net worth statement for, is to look at our progress of paying off debt over time. If you've got a 3-year plan to pay off your debt, and you look at last year, maybe you began paying off debt last year, and you see where your final balances got to, and then you can look at your final balances this year and see if you've made any headway, see if you're actually making the progress that you expect to make. And if you're not, then you know that you need to change some things. You know that you need to pick some things up and get on the ball. Now, in a similar way to tracking our debts, you're also tracking your investment accounts, like I said earlier. And what that will tell you is, okay, if my investment accounts aren't growing by a certain amount, which we talked about investment performance this week, and so you should keep that in mind as well. But maybe I'm not putting enough in. Maybe I'm not making enough contributions to get to the point that I want to get to, because eventually what will happen is your investments will end up being the majority of your net worth if you are systematically investing. And so that is what is going to get you home. That is what's going to get you to financial freedom and the level of wealth that you want to get to be able to live financially free for a long, long time into the future. And so knowing that, we can sit and track our investments over time. It is also important to note that your investments can impact your net worth in a huge way year over year. Because your investments are what can fluctuate in value the most. Your investments being the largest part of your net worth. Let's say you're invested in the S&P 500, and let's say you may do a quarterly net worth statement. So you may sit down quarterly and see where you are. And I'm not saying that you have to do that. I just want you to do it at least annually. And so let's say you sit down quarterly to see where you are. Well, if you would have sat down in December of 2019 and done a net worth statement, and then sat down in March of 2020 and done a net worth statement, your net worth would have gone down over those 3 months almost assuredly if you were invested in the S&P 500 in any substantial way. Why? Because the market fell a lot in March. The market fell over 30%. And so your net worth would likely have decreased. And so you have to keep those things in mind too. If you see your net worth has gone down, you have to ask yourself why, and compare it to previous net worth statements to be able to reconcile what has occurred. Now, over the long term, obviously, it should be going up, but short-term fluctuations can impact your net worth, and it can impact the value of your investments in a way that will make things look worse than they really are. Now then, what are some things that your net worth statement does not tell you? Your net worth statement does not tell you some very, very important things. Like your net worth statement is not tracking your income. Your net worth statement is not telling you if you're making any substantial headway in your earning potential, if you are earning more money or not. It's not telling you that. Your net worth statement is simply saying where you are at one point in time. It is not saying, oh, you're earning this much money now, or you're making this much, and this much is being contributed to this, and this much is, being deducted for that, and all these types of things. Your net worth statement is not telling you this. It's just telling you what you have at one particular point in time. And along those same lines, your net worth statement does not tell you what your expenses are. It does not track what your expenses have been. It does not track the payments that you have to make. It does not track your bills. That is what your budget is for. And in the same way that I said that the net worth statement is a lot like a balance sheet, your budget is a lot like an income statement. And so, again, if you know accounting, this should be right up your alley. You should understand, because an income statement is nothing more than revenues minus expenses is going to equal a net income, meaning what you have left over after you take all of those other things out. And so the budget will be very similar in that same way that you take your income, whatever comes into your household, which is equivalent to a firm's revenues, take out all of the expenses, and then whatever you have left, you determine what to do with what you have left in the same way that a company does. And so this is not what your net worth statement does. Your net worth statement does not look at your income minus your expenses and what's left over and where your money's going month to month. That's not what your net worth statement does. It just says, today, what do I own? What do I owe? And how much are those things worth today? And so I've heard it put a lot of times when people are teaching balance sheets and income statements that the balance sheet, or in this case, the net worth statement, is just a picture, right? It's just a picture of one moment in time, right? But the income statement is like a video. And why is the income statement or the budget like a video? Because it tells you what is happening over a period of time, if you're doing a monthly budget, over that month, what has occurred over the course of that month, or what is going to occur over the course of that month. And so it is important to note that these are the case. It is important to note that your income and your expenses are not being tracked by this net worth statement. You still have to do a budget. This is not in the place of a budget. It is alongside your budget. This is just another thing that you need to be keeping up with to make sure that you are on track financially. And even though the net worth statement keeps up with the value of your investments, it does not keep up with what you're invested in or how much you're contributing to what you're invested in. And so that is why it is very important to also look at your specific investment performance, as we talked about in yesterday's episode. That way, that can keep you up to date on what you are actually invested in and the decisions that you may need to make within your specific investment accounts. Again, all that we are learning from the net worth statement is what is there, not what specifically you're invested in and how it's done and what the return's been and what the contributions have been. No, that's not there. We're just looking at values. We're looking at what is the value, the market value today. That's all we care about in the net worth statement. But you definitely need to care about the contributions and the returns and the performance of the investments that you're invested in. It is just not going to be tracked in this particular place. The reason I'm telling you what it is not, what the net worth statement is not, is because I don't want you to be confused and think that this is all you need to do over the course of the year. You may think, oh, well, I just need to do a net worth statement at the end of the year, and that takes care of everything. I can just do that once a year and it'll tell me where I'm at and great, I'm done. No, the net worth statement is just a piece of the puzzle. It's just one thing that you should be doing to continually keep track of where you're at. Because even though the budget is going to keep track of where you're at month to month and how much you're spending month over month, what the net worth statement is going to do is it's going to say, where are we at as far as being able to live our dreams? Where are we at as far as saving for retirement? Where are we at as far as saving for our kids' college? Where are we at as far as paying down our debt? Where are we at? Where are we going? And are we on track to get there? That's what our net worth statement is really at the heart of. It is really at the heart of, are we making progress? Are we doing the things that we need to do? Are the specific monthly things that we're doing adding up to a winning formula. And over time, if you're following a plan like the Financial Action Plan, you should be seeing that it is a winning formula, and you should be seeing that you are making that progress over time, and the net worth will increase. So over the next couple of days, sit down, do a net worth statement. Sit down with your spouse if you're married. Sit down with your trusted individual that you may show your budget to or talk to about your budget, and do a net worth statement. Sit down and go through everything. This is a great chance to just recap. It's a great chance to keep things in mind. It's a great chance to sit down and go, how have things changed over this year? I know 2020 has been a tough year, but many people have seen increases in net worth. And if you have a large percentage of your net worth invested in good, mutual funds or things like that, maybe track the stock market, then yes, you should have seen an increase in your net worth this year. And it's going to help you a lot to look back 5-10 years from now at the net worth statements that you made and go, wow, look at all the debt we paid off. Wow, look at all the investments that I've accrued. Wow, look at how much I've paid my house down and how much equity I have in my house now. Or, maybe you owe nothing on your house now. Wow, look how you paid off your house. And so you'll be able to look back, hopefully with a lot of pride, hopefully with a lot of encouragement to continue moving forward and continue creating this sheet for yourself every single year so that you understand exactly what's going on in your financial life. You know where you're at. You're not missing anything. You're keeping track of what you have. You're keeping track of what you owe, and you are staying on track financially, which is what I want for you. I want you to be on track to experience financial freedom. And this is going to be a useful tool that will help you get there, and it will keep you on the straight and narrow financially. Thank you guys for watching this video. If you could, go down below, hit the big red subscribe button, like this video, leave any feedback or questions that you may have in the comments down below. If you're listening on Apple or Spotify podcasts, then make sure that you subscribe and leave me a review on those platforms. Follow me on social media at MNO with Dylan, and that's really, really good material that I'm putting out day after day that is supplementary to all the things that I'm talking about in these long-form episodes on both YouTube and the podcast platforms. And then if you need somebody to help you walk through your financial life, you need somebody to help create a plan and to help you keep accountable to that plan over the long term, then I can help you do that. Just go to my website, www.mnowithdylan.com, click on the Work with Dylan tab, and you can pick the financial coaching session type that would work best for you, and we can begin pushing towards your long-term financial goals together. So tune in tomorrow as I talk about financial crisis and specifically the probability of a financial crisis coming within the next year. So tune in for that. So thank you guys for watching this episode of Money's No Object. I am your host, Dylan Howell. God bless.